Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askslim.
And this is the askslim Market Week. This is number 2 of our free shows. Last week was the first one. Do this every single Friday where we take a look back at the markets and then a look forward as we do our short-term view of the coming week in 5 different markets. So we have a lot to talk about here about the last week for the stock market. Well, we had expected a pullback in the market, and that we got as the market continues to pull back, well, for most of the week. You know, we had in the previous weeks Greece really in the news and Iran in the news and a big breakdown in China in the news. Those things were a lot quieter this week. They weren't really affecting markets at all. Really, it was an earnings week, and we've had a lot of moves based on that, and a market which had had a good upside spurt ready to correct, and that's really what we have seen in here. Now, that China news, that's not over with, and I'm thinking that we're going to get another leg on the downside in there sooner rather than later. We saw gold move to the downside again and break down through important supports. Energy certainly still weak, and oil still weak. As that one has continued to make lows, we've seen stocks and materials and energies all on the weak side. Some things I put out this week in the member section were some things about some of those stocks that looked like they were getting ready to be, that we should nibble on them on the long side. I think that is the case if you want to go back and look at those particular segments for members, of course, out there. So what we do is take a look at the last week and then look at our calendar here about what's coming up. And we're going to start with that right now. I'm going to put up an unusual looking chart right here, a 60-minute chart hourly of the E-mini S&P with the background news that have affected the markets, and take a look at that right here. So this is, as I said, a 60-minute chart. The gray areas are the overnight trading. We want to look at that, and we want to look at the influences in the market, and that's what I have written down in here. Well, you know, the gray area, we really want to look at, well, what happened overnight and then what happened during the day as the market continued. Well, you know, gold broke major support that day. The gold stocks were down 8%. And after the analyst came out with very favorable comments on it, that proved to be a giant mistake. And Amazon gets a big upgrade on that particular day, and we had been positive on that one, and it moves up strongly and took the lead actually in the news that in clothing sales. Turns out that the news later in the week that came out on Friday really was the real big news about earnings. And Morgan Stanley, Halliburton, they beat on earnings nicely. On Tuesday, well, that was a big disappointment by IBM. Now, we had the market try to rally in the overnight session, but then it started to erode when Europe opened up. And then from the IBM earnings, it just went into collapse mode. Both that and United Technologies, which we put out a negative comment on, they both led the market lower by about 200 points. But the NASDAQ remained rock solid, and well, Tesla started to move down after a downgrade over there. And that stock had gotten up into a resistance area. Take a look at Wednesday, and what did we see there? Well, we saw Apple. They reported their earnings, and that was the night before, and we had a continual slide overnight in there. But when the market opened, it got a pop back to the upside. You can see that right there. But the NASDAQ, that dropped some 51 points on the day. Whirlpool had a big rise, 6% on its earnings, as did a few other stocks that were positive, but they couldn't hold the market up. And Chipotle fell 6% on its earnings. early on in the day, but then reversed to a 7% gain, joining Whirlpool on the upside. And they had very positive comments on their conference call, talked about a buyback. So that was a 13% swing from the initial sell-off to the big rally in Chipotle, CMG. That was a big move. Thursday came and we had tried to see an overnight rally. You can see the markets trying to rally right in here. But then again, when Europe opened, it started to move on the downside. And jobless claims came out. They were really good. They were down 26,000 to 255, a very low number. But the bond market did not did not fall, basically, as there was a flight to safety going on, as the transports were getting hammered by the rail stocks. In fact, UNP reports earnings, and that cracks by 6.5%. But SanDisk, on the other side of that, soars 17%, couldn't save the market. Other big gainers, Under Armour, F5, and Raytheon, big movers on the upside on earnings on that day. That brings us to today, which is Friday, and today was the shocker in Amazon. We'll look at that chart just in a few minutes. Amazon soars up on these huge earnings. They beat by 44 cents. They were expected to lose something like 16 cents, but they make 25 cents as they are now becoming a real company, and that stock just explodes to the upside, 77 points as we look at it right now. It's not enough to support the market, which really has taken a decline in here, with S&Ps falling down as much as 12 as I record this at just in the late morning here. It's not, this Amazon earnings just not enough. BIB, COF, TRIP, huge downside on earnings. And material stocks, they're down again on the gold market, which has continued to be weak also. So lots of weakness in the materials and in the gold stock. So that's a look at our unusual chart, this calendar, that this calendar will put up next. But this is the 60-minute chart that gives us the background news on what moved the markets. That correction we were expecting, there it sure did come. Next thing we're going to look at is our calendar for the week. Well, we created an unusual calendar in here in that what it has in here is the coming week, and the coming week earnings before the opening, earnings after the opening, and important economic events. So we'll take a look at that one right now. Here is the earnings and economic calendar, and this shows you Monday through Friday, of course, and the top row up there is the earnings for each day. Pretty clear. Now this will be up here for you to make a screenshot of if you want to print it off and have that next to your trading desk right there. I think the biggest economic event, of course, we have a 2-day meeting by the FOMC, and we get to hear Janet Yellen again, and she has really been changing her tone, and with a good, strong expectation now that interest rates are going to start to go up in September. So we probably won't get that happening right now, but Wednesday, that is the big announcement. Not much else going on out there for the rest of the week as far as news goes. So market probably starts to slow down a little bit as we get into Tuesday and then into Wednesday afternoon, waiting for that report. So that is the calendar for the coming week. I hope that's helpful to you with all of those earnings reports up there. So let me know if you like that, by the way. So we're going to move on and get into some other good things in the show, but I want to give you a quick reminder right now not to forget to go to www.askslim.com. If you haven't done it yet, that's our new website. It's really a nice-looking website, so go there. Don't forget to register for this show. It's free, but we'd still love to have you as part of our community. If you want to get our other videos, educational videos and trading videos, there's so much in there. Our really popular Future Speak, our Wednesday show, it's about 35-minute segment that talks about 6 segments of the market, 24 different charts that we go over, and we've done a nice job in there. Also, we're adding so many things to our charts. Me and Arvi. Arvi is my assistant cyclical technical analyst. That's a big title, and he's done a fantastic job. We keep putting new labels and things in there for more things for you to see that can help you as you use those charts for people that are chart subscribers. So don't miss our videos, though. We have a great special going on now for just a very, very small free. You get a free month if you sign up for 3 right now. You'll get Future Speak, stock sectors, where we look at different stocks, and just sent one out on oils this week. Tools for Techs, where we look at a lot of different studies that you can put on your platform. Trader Psychology, which is always very, very popular. Ideas for IRAs, and my big picture analysis on the markets, and we have some of those coming up pretty soon. That's 16 different videos that we're going to be putting out every month, and for a really, really special fee that comes out to, like, with the free month, like 60 cents a day. How can you not subscribe to that? That would be our level 2 subscription. And so I hope you go there and subscribe. We really use the support, your support, as we want to keep being able to bring this great content to you every single week. So that is the first segment, and we'll be back in a second with, well, some of the best of the week. There has been movers this week. Man, it's earnings, and some stuff has really gone up, well, and down. Huge blowouts on some of these on the upside. Some of the best have been like Pandora up big, VeriSign up big. Just some surprising ones that just don't seem to get those kind of moves, big moves. We're going to look at 4 of them, though, right now on the charts, and you can see that some of these, well, they kind of made sense to me based on looking at these charts. First thing we'll take a look at is SanDisk, SNDK. This one had just a very, very nice move to the upside. Here is that chart. We're, of course, on the weekly chart right here. Now, you'll note that this was a stock that was listed on my list of the riskiest 18 for 2015, and the stock has, well, done pretty poorly. Look what it did. It was up here at the beginning of the year, comes all the way down from, well, in the mid-90s, trading down to as low as about 52. Now take a look at this week right here. Now you'll notice that there's a cyclicality in here, and that, essentially we had the low that was due right about in this week, and that low comes, it gets this big breakout on the upside, and that is very, very timely, where we get that nice upside move right there. Take a quick look at the daily chart, and you'll see actually that happened a couple days ago, that big upside move. Now it is pulling down a little bit today, correcting some, but this is a big breakaway gap on that chart. There's that downside trend line, and this stock is very, very buyable on dips right now. You could see it going up, and, well, that 89-day moving average is the place that it really should test. The next stock that we're going to take a look at is Visa. Man, this one blew right through our upside fib extensions that we had in there. We had it in this positive pattern, and if you look at these smaller cycles, cycles is what I look at. You see these small things right down over here? Well, there's also a big one, but let's just look at these smaller ones right in here. You can see that one, and that one, and that one, which made a low right here and was due to turn up, which it did, and it blows out on the upside right there. Now, this is likely to get into some corrective period on here, do some flagging or something when you get that kind of a big move. Overall, it's been a good pattern, and it remains so. Next one we're going to look at is Under Armour UA. And Under Armour, well, let's move these over so that we can get a clear look at that. This has been in a rising zone. We had looked for this corrective period right in here to give us something. All it gave us was a little sideways action in here, and then when it gets over here, it blows out on the upside again. That is some very, very strong move in Under Armour. We'll be looking again for this stock to probably flag a little bit in here. Here's the daily chart. By the way, the slim ribbon, take a look at this, and you can use for momentum, slim ribbon, mobile band, or Hull moving average. So this is where it turned positive right there, it's remained positive in here. This fooled us right at that point. We thought there was an island reversal here and it was going to turn lower. However, positive momentum, we probably would not have taken much of a short position. But this earnings report just blew it out on the upside. Sorry, I have a cold in here, and I know you can hear that as my voice is very, very hoarse today. But we're going to do a show here because, well, we're a trooper. So that could have been a stock that one could have been topping, but man, earnings, you never know, and that blows out on the upside. Another super one. But the star in here that we want to really look at is Amazon, AMZN. This is up 15% on the day, and massive move on the upside. Had to extend this big green zone up based on this, and we raised the support zone based on the size of the move also. And basically we expect only a minor flagging to go on in here in the next few weeks. This was a monstrous upside earnings report, as we showed in the earlier segment, and this looks to me like, well, a little flag in here and then probably up again significantly after this low period. You can see that right there on the cycle patterns, and that suggests, well, anything in here that it moves on the sideways or lower, that's likely to be an opportunity to buy the stock. Here you can see where our fib extensions were on the daily, and of course on this earnings report it just absolutely blows through that number. Now it's pulled back quite a bit in here, from up about close to 100 points to now, well, I'm looking at it only up 74 only. So we're going to look for a lot of gyration in here, some corrective weeks, but man, this is one super pattern right in here. Those of you that follow me on Twitter, I tweeted out about it when it was trading down over here last week before this breakout. And I said, man, if this market was going down, and if this can't break at all, there's something on the upside coming in here, and man, did that foretell it really, really well. So that is a look at Amazon. Now, I'm telling you, the moves have been really, really big this week. Biogen getting crushed, absolutely, 16% on the day. Capital One, and by the way, the Biogen is on one of their top drugs, which now they're talking about growth in there slowing. A lot of downgrades in there, tons of them. Capital One, a bad miss, and a whole bunch of downgrades in there. And TRIP, TRIP, that's taken down a lot of stocks also in this category. But, those negative things, those are really for the next segment. By the way, keep your eye on M, because that is the symbol for Macy's. That one looks like a flag, and that might be a good one for the coming week. But we're going to get to some of these negative chart patterns right now. Well, there's been some bad ones this week, some really bad ones, and some really, really bad ones. I'm going to show you one of those also. Of course, it's a lot of momentum on the downside going on. Material stocks really getting still wailed on. Oil stocks still getting hit really hard. All of those in downtrends. We've seen some big downside moves. Interesting, one is Union Pacific. That one reported earnings, and of course this is being greatly affected by the coal industry, and that one turned out to be really bad. Talk about a bad stock. Let's put this chart up for you to see in Union Pacific. Here is the weekly chart we're going to put up, and there you go. And you can see this one has been, well, it's just been a plain ski slope on the way down. And there's nothing here that says to me that this thing really is going to stop time-wise. Looks like we have another 6 weeks or more before this low is seen. But look what it came down to right over here. This is a big monthly support area. We have to go to the monthlies to find supports when we have patterns that look this bad. So thanks to my assistant, Arvi, who put that in there, and right down on the number is where it got to today, just under the 92 area, and that's where it sits. So Union Pacific was certainly a bad one. Hertz is another one that got hit very, very hard, and that one based on a downgrade by Morgan Stanley, and that one has just absolutely gotten wailed on. Also, have to mention Apple. Now, I'm going to put up the Apple charts later in the show, and then you'll be able to see that stock took a 4.5% hit when it reported earnings this week, based on iPad slowing down, iPhone slowing down, and that not likely going to show you anything good on that chart when we look at it, based on a question later on in emails and tweets. Well, we really got to look at what one of the worst charts is of the week. Maybe it's the worst. That's the really, really bad one. And we're going to put that one up for you. That is one of the old favorites, of course, called Big Blue. Yeah, everybody likes Big Blue, and everybody thought their move into the cloud was going to make a big deal for them. I've been very skeptical on this stock all along. It had a big, big break back last year and then has been trying to bounce, but no way. Here is the weekly chart. You can see here, this plain clearly shows you that there is a massive breakdown in here. Now, this yellow zone that you're looking at right here, that's this corrective period. What it said was after that it was likely going to get a rally in there. You see, you got the rally. That's this uptick right here. It gets up into the resistance zone, touches on the 50, that's the 50% Fibonacci, into this gap. Everybody says, well, these things have to fill the gaps. This is a horrible pattern. I think IBM is going much lower. I see it going into the low 100s, and this pattern shows real trouble. This is a massive breakdown, and this pattern right in here, here's how you can draw it. The low in this gets the rally, and then it has all of this time to fall. The next low due out in October, November period, and this is a miserable pattern in IBM. Take a look at the daily chart. You could see this really huge, high volume negative kicker. That was where the support was, right there. Amazing, it stopped right on the number. It probably rallies a little bit more, but overall, this stock is in some huge trouble. So those are the stocks that were really bad, and the worst of the week, clearly IBM. You know, look this week at the defense group. I'm going to show you one later on that shows looks like long-term it's rolling over, and that group does look to me like that's one to look for some downside in. So that's the worst of this week. You always hear people say, don't fight the trend. You might hear some say, I want to catch that trend and ride it. One of the problems is, we all have different perspectives, different holding periods. What's a trend for one person, well, that might just be a blip in the chart for somebody else. The perspective I want to talk about today, is about the longer term trends. In fact, really long term trends. The kind of things that, well, you think about when you want to put something in your IRA or something that you want to invest in for your kid's college fund. So these are kind of longer term holdings. The problem is, how do you really identify the trend? What tools do you use? And I'm going to show an indicator here and some charts with that indicator that I've never exactly showed this particular use of the indicator before. I think it really is going to be a good one. Most stocks right now, well, they are in some pretty strong trends. And if you look at the groups, they're really trending in this market. It's an oddly diverse market. You have groups like materials, energy, trending on the downside and seemingly with relentless selling. And you have like the biotechs moving up quite sharply, and even stocks like Starbucks, Amazon, they don't seem to stop on the upside either. In fact, Amazon, great earnings reported, big up move. and that has been in an uptrend. So the question is, how do you really know when you have a trend? We're going to look right now at a chart. We're going to start out with a chart of Starbucks because I mentioned it, and we're going to look at the Hull moving average. Now that's one I talk about a lot, and you see it on my weekly charts a lot. This is a really, really great indicator. I'm going to do a Tech Tools segment on that pretty soon, and that will really explain it in depth. But I want to just look at it on these longer-term charts right now, and I think you're going to see value in them. Let's look at Starbucks, and we're going to look at a monthly chart here going back to 2010. So we're looking at a 5-year monthly chart just to get a close look at this indicator, and you will see how great of an indicator this trend is. For finding trends. This is Starbucks with the Hull moving average, and take a look at this. Now you can see that when the Hull moving average is moving up, it really well identifies a trend, especially when the stock, now remember this is a monthly, when the stock is above that Hull moving average or trading on it and moving up. Then when it gets under and the Hull moves down, then you know you're in a corrective type thing or decline. Clearly Starbucks has been in a very strong move in here, and while on the shorter term it may give some signs that it's going to pull back, this is really a long-term discussion that we're having right now, and you can see that Starbucks clearly is in a strong uptrend when we look at that. So a great look at that Hull moving average and how it can give you a sense of trend. So now I want to look at a couple other stocks now that we looked at that, just to show you some things that actually are changing. Now this is interesting because I go through all 330 stocks all week long, and when I looked today at all of them, believe it or not, this morning before even the market opened, specifically looking at monthlies, there were very, very few where the Hull moving average was giving any kind of a signal. As a matter of fact, there's only a couple that I saw, none really turning up and a couple turning down, and this will give you an example of how to identify what looks like a risk of a trend ending. Two stocks that we're going to look at. First one is Lockheed Martin, LMT. This is a stock that has been, well, a monster, moving up from in the 60s up to the 200s in just the last few years. It's been really terrific. Of course, you got to wonder about the defense spending and whether that can continue to support the movement that we've seen in these stocks. Take a look here at Lockheed Martin, and you can see that after a very, very significant move on the upside, with the Hull moving average essentially saying from this point right in here where it turned up, and you can see when you get into these long sideways moves that they're like consolidations in here, but when it turned up in earnest here, it just caught this whole move 100 points on the upside, and now here you have a warning. And if you're a candlestick guy, gal, this is a perfect evening star, so that even says there's a topping in here. Now take a look. The Hull moving average has now gotten back. The price has gotten back up to the Hull moving average, which is probably a point where you want to sell it. Next one I'm going to show you, though, is Travelers, TRV, and you can see this one after this long trip on the upside also. Come on up here now. You can see that it has turned over, and this one is trying to rally back, but not even back up to the Hull moving average yet. So that is a good look at another stock that looks like it's rolling over, Travelers Insurance. And were I to be in this stock, this would be one that I would be wanting to exit because, well, it's moving up and it is given that kind of a signal. The question was in my mind when I started to look at these things, and that is, well, how about the stock market? S&P 500, what has that shown in here? Have we ever had a reason to think that this market has peaked? And the Hull moving average could tell you a lot about that. Watch soon. I'm going to do a big picture on the stock market, and I'll come back to this indicator at that time. But at least right now, I want to show you the Hull moving average on the monthly chart on the S&P 500. And you could see right in here that as it turned bullish back after the mini bear market that occurred in 2011, That's way back over here. And you had this break of 21%. It turned positive right here in 2012, and it has been positive ever since, and no signal yet that it's turning over. So just wanted to show you that and take a peek at this great indicator, the whole moving average, and how that shows up on the stock market. And that is trending for this week. All right, every Friday I answer a whole bunch of your emails and tweets. I've done that for 3.5 years. This is a different week because, well, most of my questions are now from members. So if you're not a member, well, it's time to join. I'm going to get right into this. Have about 9 great questions in here. First one is from JD, a member. Great future speak this week. My father and I have a large position in light crude. And I'd like to know your price target for the next 26 days in this expiration cycle. Good question. I'm assuming you have a position on that is short options. So I'm going to put that up right now. This chart we're going to put up is the light crude chart weekly, and I'm going to look at the daily chart actually a little bit later in the show as we do our short-term view of the coming week. Want to look in here. The important aspect regarding your question is where the supports, and that's like right over here, and this old low right over here. This is the continuous chart that we're looking at on the weekly. So it's picking up the old low number way down over here in the 42s, not rolled contracts. So where does that support come in? Well, we'll call it around 46.50 to 60 area, right in there, maybe 46.70, pretty close to that number right there. And then if it happens to break, it's that old low around 42. So that is where the supports are in light crude. So next question is from DV. You see, now they're back in the oil sector because, well, there's lots of people in oil stocks and they've been getting hammered. He says, I see you featured oil stocks in stock sectors. Yes, I did for members. That's I posted that on Thursday for members, and I had a pretty interesting look at some of the oil stocks in there. XLE is the question in here, and DV says it's down 11 days in a row, and this is a 100% retracement from the rally in 2013. So we're going to switch the chart over now to XLE. And take a look at that. XLE is the Spider Energy Sector ETF, and we're going to put that up right now. Here is the XLE chart, and you can see by this big cycle in here, man, this is pointing to a low. The point you made was that, well, I mean, it's made this big round trip. You said from 2013, which is way over here, and you could see, well, yeah, it gave the whole thing up actually at the end of last year. I actually, I think it's interesting that just in this shorter term period right in here, that it's given up the whole round trip and has made a new low in there, even though the oil price has not. So this, you see these two timing spikes, that says that's where we expect the low to be. And if we look over at the daily chart, you'll see that, well, this has been in a massive decline. The slim ribbon way back over here in May gave you a negative momentum signal, and it has been down ever since. I'm noticing this doji in here, and that looks to me like it might be stalling on the downside, and that is a good reason to believe that you start to look for an update to confirm it, and that could be the bottom. So yeah, I do think we're going to get a bounce in here in XLE, and I actually tweeted out earlier about a couple of stocks in the natural gas area, APC, APA. They had hammer bottoms in there, so I think we're going to have a pretty good bounce coming in that group, XLE. We're going to stay right up here on the charts on the daily chart. GW writes me, wants to know, will I look at the Apple chart? Well, I'm going to do that for you right now. Here is this daily chart. Now, this looks to me like it's finding resistance right over here, and has this big island reversal, and well, that's a lot of trouble when you see that. Now, Apple tried to get a big bounce. It came up, oh, look at that perfect move up to that resistance area, and then failed again after it tried to get that bounce going. So Apple, I think it's actually in some trouble in here when you get a big high volume downside gap like that. And this area here that we're looking at in this 126 to 128 area, that is a lot of problem, and I think you're going to continue to see the stock fail from that area. This is what we were looking at last week, where we said there was on the longer term pattern, it got down to support, but there was a couple of synchronized lows coming right in here, and that's this, and that's why I think it's going to get back in here and test this zone under 120 again. So this is not a pretty pattern that we are looking at all when you look at Apple. And the next question is from RJ. RJ writes to me and says, when you do covered calls in the indexes, is there an optimal time frame to sell premium? So doing covered calls, let's say you're buying the Spiders SPY and then selling calls against it, that would be a covered call. I actually like to do those with not a lot of time left to go, 2-3 weeks, 4 on the outside. I want to get right to where we're going to start to get some accelerated decay going on in those options. If you start to do further out options than that, then you start to get a big move in the ETF, you're not going to get all that much protection. And you have to wait a long time for the decay to start to really come in. So, I really like 2-3 weeks out as the sweet spot for doing that kind of a trade if you're an active trader. Now, if you're a longer term trader and not that active, you'll probably go out a little bit further. But my play is to do it in a little bit shorter time frame. Jay-Z writes me and wants to know about cotton. He says it's been good trading in cotton. Can't break the 68 level on the upside. Wants to know, is this now in a downtrend? I actually think not, and I'm going to show you why. We're going to look at cotton. That's /CT on the weekly chart. And that will be really a tell in here when you look at it if you're looking at cycles. Here are the cycles in cotton, and let me just blow this out a little further. Okay, and let me get this up here. Here we go. And here in cotton, what we see is what we call a basing pattern. Now, cotton had a very, very big decline, and you had made a point that it can't get through 68, and you could see it tried right over here, and it tried right over here, and then pulled back. But the key thing in here to look at is the cyclical pattern where it made the low in here, and it had this rally and then rolled over just like it's supposed to, but it's even holding above this 34-week moving average. My call is that it's about to move into a positive period, and cotton is likely to get a sizable move right in here and through that 68 level sometime, I would call it, the next month or two. So that to me looks like a good pattern in cotton, and it's not one that I really want to sell. So when you look here at the daily pattern, there is a daily cyclical pattern on here that is pretty good, and we're getting right down here to the bottom of that right now. Now, we've had a negative momentum signal right there, so that would keep me a little less aggressive, but maybe we can repair that and see cotton then move up and through those resistances that we see at 68. So that is cotton on the daily chart and the weekly chart. Next email is from K.A. in Singapore. He says, my partner and I are writing a program for trading futures and stocks. He says what we use is a weekly charts for our trend indicator. Now, when somebody tells me that, I know that they probably have a pretty long holding period. He says that we're using 60-minute charts for our entries and exits. And he says, I'm having good success keeping my losses small. He says, but my gains are really small, and that's frustrating. Well, I can tell you what's going on. I think that you have a big mismatch in the charts that you're using. Generally, when you're using a weekly chart for trend, you should be using a longer than a 60-minute chart for entry and exits, or else the 60-minute chart is going to give you a lot of noise, and you're going to then be taken out of your positions fast. The real answer is to go to either a daily, or if you want something shorter for your entry and exits, use a 4-hour chart. And that will match up better with the weekly. You'll have to widen out your stop locations, and that means you'll have some bigger risk on the loss side. However, there'll be less noise in the market, and you're less likely to be taken out of your position and more likely to catch that ride, and I think that's what you're really looking to do. So you'll get it's important to get a match. Really, when I talk to about short-term trades and scalpers, we look at things like a good match is a 5-minute and 15-minute, or a good match might be a 10-minute and a 30-minute. It's generally good to make sure that those match up well, so the noise in the market doesn't take you out of the trade. So good question. Got to opportunity to expand on that a little bit. Got another from DP. DP writes, I saw your tweet on natural gas on APA and APC. What are your targets on these stocks? So let's look at that, because APA and APC, I was seeing a hammer bottom form, and there I am long APC, and been long it for a couple days, and then added to the position when I saw that happening, and it hasn't been right. I've been a little early on that, thinking that a bottom was coming. I mentioned that one last week. So let's put up the chart of APA. That's Apache, and then we'll take a look at APC, which is Anadarko. So get this chart over here, and you'll see top left is, of course, the weekly, the right is the daily, and you'll see in here that this has been in, quite a downtrend. You can see that Hull moving average here as it continues to move down. So this is the cycle pattern, and look at this as a weekly chart. This thing has been down for, there was one up week, but it's 3 straight months on the downside. Just amazing, that kind of move. Now it's really long in here, and the cyclical pattern suggests there's going to be a rally. You can see those dotted lines. That's the forecasts we have on the majority of our charts for the people that are members. And here you'll see on the daily chart that it has had a couple of these doji stars. It's kind of a hanging man. That's kind of a hammer bottom in here. When you get these stars, it means that you're getting a good sense that the trend is losing its momentum. And I actually think that the move is going to take you up to this. You see this 21, this 8-day moving average, 13 and 21. These are exponentials in the slim ribbon. Generally, the moves get you back into it. So for a short-term trader, I think that the move is going to take you up into this 50-51 number for a pretty quick bounce there in Apache. Now, APC, Anadarko, has got a very similar pattern. There's your hammer bottom, a couple of spinning tops, that's called, making the bottom. That is showing a stalling in there. And you can see, again, the same type of pattern here. These two blue spikes are pointing to the week that the low is supposed to come. So we're going to look for a bounce in there. Also, in Anadarko, again, we're going to look for this moving average around $74 as the first target on the upside, 74.50 for a bounce in there. And I think the bounce is going to be a lot better than that, but that's just a first target there in APC and APA. So that's looking at those two natural gas stocks that you're buying a falling knife in here, but here we are with the charts suggesting that they are quite oversold and quite ready to have a rebound in there. So that's for a trader, and again, not an investable position when we look at that. The next thing we're going to look at is AS writes me. He says, and by the way, AS is from Australia, so we got Australia and Singapore today. He says, you often talk about the importance of combining directional trading with a strategic approach. Yeah, you heard me say that lots of times for a lot of years. He says, I'm close to 100% success trading in that particular style. Well, that is pretty outstanding, man. I wish I was that good. So that's really great. He says, you called at one point for a bounce in RSX, that's Russia. He said, I sold high IV puts and did well on it. That's just an example. He says, is this it? Is this what you mean doing it that way? Well, that's exactly it. It's really looking at what the directional assumption is, and in the stocks that have the best highest IV, the best traders, the stuff that you can use with the strategic and directional approach, I think you can really get an edge that way doing both. And I have done this show back for a lot of years. We put together the quantitative and strategic approach, and there was tons of interest in that. So somewhere down the road, I'm going to be able to do that again, and we'll start talking about putting those approaches together. So I'm glad it's been successful for you. That is great. And the last question is from PC. He says, on your old network, this is interesting, I kind of changed the wording on this one a little bit. He says, I heard it said that no professional floor traders use technical analysis. Is that true? Well, here's how it went. When I got on the floor in the 70s, everybody was a technical analyst. Nobody looked at the quants at all. Well, there really wasn't any to look at. So, yeah, everybody looked at charts. And then through the 80s, most people did continue to look at charts. The way it changed, what happened was that technology came in, really, and the option modeling came in, and you got Black-Scholes and all kinds of other models, and all of a sudden the firms started to figure out how to make money that way. And what they did was they started, replacing the independent traders that were out there, buying up the seats and putting on their own traders and using the technology. And it got to the point, in the 90s, 2000s, before, there's no floor traders now. But then it became almost all quantitative for the option floor. Remember, we're talking about option trading. Now, it's not accurate when you talk about the futures because they're all technical analysts on the futures floors. So when it comes to the option floors, yes, they did become quantitative in the 1990s and pretty much stayed that way until, mostly the floors have died, right, or closed. Now, I basically, I disagree with the whole concept of, technical analysis doesn't work. And, I have to tell you that, my old network that I was with, I love them all. They're fantastic. There's no question about that. I think they just have to toot their own horn because of their platform, and that's why they diss technical analysis all of the time. And in this case, I totally disagree with them. And they'll probably hear this, and I'm happy. And they know I feel that way. So, floor trading, it did, in options, become all quantitative, not the other floors. And they're very wrong when they say that. That is emails and tweets for today.
Hi, I'm Epiphany, your Ask Slim spokesperson. Here's important news you can use. With the Ask Slim memberships, you can raise your probability of success as a trader or self-directed investor. Be better prepared for the coming week and make informed decisions when you watch our weekly show, the Ask Slim Market Week. Archives to the show and more are in Level 1. In our videos in Level 2, get help with trades for all styles of market participation. Better understand 6 sectors of the futures markets, learn technical tools, manage the impact of your emotions, and apply analysis of stock sectors in the big picture of the major markets, and you'll have access to our ever-growing video library. Level 3 is our trader support. Call it Coaching Light. Ask Slim for personalized help by email on the technical, strategic, and psychological aspects of trading. Or go all in with Slim's charts right on your TOS platform. Level 4 gets weekly updates with annotated charts on over 300 widely followed stocks, futures, indexes, and ETFs. Slim's unique cycle charts add the dimension of timing to help you improve your own analysis and strategic approach to the markets. Learn more and choose the membership that works best for you at www.askslim.com/membership.
All right, this is the short-term view of the market, just like I've done every single Friday for many years. Take a short-term look at 5 different markets. Well, make that 6 if you count the VIX, oil, gold, the euro, the bond market, S&P 500 as the stock market. Lots went on in the last week, and I would give myself, as I always do, I rate myself about a 60% on the week. Got a couple of markets wrong and 3 of the markets pretty right. The 2 I got wrong were light crude and gold, and did really well as far as the euro. The bond market moved up as we expected, and the S&P 500 had the correction as we expected. So overall, we'll call it a decent week when we look at that. We're going to look at daily charts. For those of you that are interested in the weekly charts, that is for members, and you can see that in Future Speak, which we do on Wednesdays. And that right now, the focus, though, is on the shorter term charts. So we're going to take a look first at the light crude chart. Here's that chart coming up for you, and notice that this is the daily chart. And what we had expected in the last week was that light crude was going to pull, was going to get into a rally mode. So we were wrong about that, and we had to revise this count a little bit because we weren't exactly sure. It was an unusual 6-bar low right here, and if you extend it out to that other low, it made a lot more sense. So that essentially puts us at where we thought we were last week on the short term. We really cautioned about the condition of this market. We said this pattern is not great. We were looking for a potential bounce, but really a small week. Well, we're looking for that again right now. We're going to look for a bounce up into the new revised resistance, revised because, well, the contract went lower, and that comes in right around the, we'll call it 50.20 to 50.90 area is where we expect the bounce to come. You could see trading right on its lows here around midday, and this bounce, of course, is in the midst of this big declining move right in here, that's dotted line. So we're very suspicious about any rally in here. Right now you can see the massive weakness that we're seeing in there. So we're going to call a small up week and getting this bounce in here. And again, bounces are completely under suspicion. Next thing we're going to look at is the gold market /GC. Put that one up for you. And what we looked for in gold was a bounce. We thought we'd get a small up week. Now, this has skirted down a few days past this low we expected. We thought it would reverse up sometime during the week. Now, you can see today we're getting a hammer bottom in there. So I just think that this temporary bottom in here has just extended out a couple of days. We got this one wrong also. These are the 2 that didn't, the patterns did not work out in the short term as we expected. Remember, the longer term patterns are just working great for us because they've been in this negative breakdown, so the question really is about the shorter term pattern, and this is what we're looking for in the coming week. That would be a bounce in there, a move up to 111.10 to 111.21. You could see the slim ribbon coming down in here, which is going to offer resistance also. So that bounce probably will not hold in gold, and that we're looking for, you see another downturn when that comes. So this is going to be a good short side setup when that comes, but we are going to look for that bounce to come in gold. So first 2 of them we did get wrong. Second one, and then the third one we're going to look at is the bond market, which is /ZN. We're going to look at the 10-year as our proxy for the bond market, and you can see this big pattern in here. Everything we look at in here points to a very, very negative pattern. We were looking for a bounce for the week. We thought it would be a week that kind of went to the upside. And then moved into this resistance area, and then after that we're looking for a failure. Our upside target for the week was around the 126.15 to 24 area. Right now it's trading 126.23 after popping up through it a little bit. We're going to look for a move on the downside in here, and that downside to the area of support 126.03 down to 125.28. That is what we're looking for in the next week. It looks like a short side trade setting up pretty much right now as we look at it, and then after that, well, we'll see how low this gets. I think it's a high probability we're going to see a down week this week as it does roll over. Last week we thought it would be in the process of rolling over, and then the following week, which is the week we're looking at now, was the big risk on the downside, and that's still what we see here is risk on the downside. Next thing we're going to look at is the euro. I flip-flop them actually because I usually look at the euro before the bonds, so we'll switch this over to /6E. And that'll give us the euro currency. We were looking this week for a reverse, kind of a little test of the downside and then moving up. Well, that's pretty much what we got, and we thought it would be an up week, and that is what we have. Now, there's some resistance up here. What this looks like now is that we're still going to be chopping on the upside. We'll look for that area about 150.10. That's the 89-day moving average. And way up here, that next resistance at about 111. The last one I said was around 110.50. Sorry, I mixed up those numbers. And this one coming up here, we'll call it 111.40, 111.45, where the next resistance is. We could get up there. We don't look for a really breakaway market here, but we think it'll chop its way on the upside for the week, and we'll call that a small week on the upside, still with some upside movement in there. Next thing we're going to look at is the S&P 500. This is what we were called for the week. We thought it would test this support zone. I'm a little surprised that it got down through this 2098 area, but this is perfectly fine for this correction. This is the 13th day of this small pattern, and I want you to see the continual patterns in here that show you 14 days right here, and then the rally, and then 15 days right here, and then the rally, and 13 days right here. So we're going to look for a couple more days in here, and then a reversal to the upside as this cycle pushes up. This is very, very likely to give you a test of those resistance areas. So we're going to look for that test in the next week up here. This is we'll call that, let's just get an exact number. That first resistance is, we'll call it 2112. That's not all that far. 2112 to 2117 is that zone. But most of these rallies have seen us get up a lot more than that when they come off of these lows. Now, if we go up and fail, now get into this zone, it's a high probability we're going to do this in this next week. If we get up into here and fail after that, that's going to have a negative message. That's like this one right in here, 5 days up and then a big hit. The odds are high it's going to go up through the highs and not do that, but we always want to have our eyes open for how this acts when it gets up into the next resistance area. So China's in the background. That to me is the worst potential market to bother us, and we'll see. There's still risk in here a couple more days, and we'll see what this upturn brings us, and it's a high probability we will get that upturn. Now the VIX agrees with that. And last week we said the VIX would probably rally. There's the rally in here as an inverse to the correction that we thought was coming in the stock market. There it is. But now remember, we think the stock market's going to rally, and the inverse to that will be that, well, in a couple days this rolls over here and we start to see the VIX come down and test this 12 number again, or a little bit lower. So that's the pattern that is shaping up here, and that is all of the short-term view of the coming week. Hope you enjoyed that. I hope you enjoyed the whole show, and that there's good value in this for you. Don't forget to go to askslim.com and sign up, and send me your emails, slim@askslim.com. That's it for the Market Week for this week.
Well, I'm going to sit